Welcome to The Explainer. Today, we're diving straight into the Q1 Fiscal 2027 earnings report from Mind Technology. Whether you're an investor, an industry analyst, or honestly just someone fascinated by the business side of marine exploration, we're going to unpack exactly what's happening under the hood to see how their financial health is really holding up. We've distilled all the raw data down into a clear, straightforward analytical journey for you.
So let's jump right into this marine tech company's latest data and see how they're navigating what have been some pretty choppy macro waters. Mind Technology is a major player, right? They provide the literal nuts and bolts, the equipment for the oceanographic, hydrographic, defense, and seismic industries. Specifically, today we're zeroing in on their results for the quarter that ended April 30, 2026.
Here is our roadmap for today. First, Q1 2027 financial highlights. Second, the aftermarket anchor. Third, navigating macro uncertainties. And finally, their long-term outlook and strategy.
Section 1. Q1 2027 Financial Highlights. Let's get the bottom line right up front.
Right out of the gate, let's look at the actual numbers they posted. The headline figure grabbing everyone's attention is a really solid $9.7 million in revenue for the first quarter of fiscal 2027. Now, in the world of corporate earnings, top-line revenue is basically the first vital sign of a company's momentum. So starting the fiscal year knocking on the door of the $10 million mark, that sets a very definitive, positive tone for everything else we're going to talk about today.
And the year-over-year leap here is pretty undeniable. They went from $7.9 million reported in Q1 2026 straight up to that $9.7 million mark for Q1 27. That's a highly visible, measurable expansion in their top-line sales.
And it actually gets better when we look at adjusted EBITDA, which, is basically how we measure a company's core operational profitability. They hit $811,000. To put that massive swing into perspective, just a year prior in Q1 2026, they were sitting at a negative $179,000. Turning a negative margin into over $800,000 a positive result, that shows some serious operational traction.
They even successfully clawed their way back to a positive operating income of $14,000. Now sure, $14,000 might sound like absolute peanuts on a corporate scale, but context is everything here. Operating income is what's left after you pay for the day-to-day costs of just keeping the lights on. In the exact same quarter last year, they were bleeding a $658,000 operating loss. Crossing that threshold from a heavy loss back into the black is a huge milestone, and it establishes a great baseline for this quarter.
Moving on to Section 2, the aftermarket anchor. This is all about stabilizing the revenue ship.
So, how exactly did they achieve this stability and growth? Well, it turns out that exactly 50%, literally half of their total revenue this quarter, was anchored entirely by their aftermarket business. When a company sells highly specialized marine equipment, making that initial sale is really only part of the story. The ongoing parts, the maintenance, the upgrades, that aftermarket support is a total lifeline. It's a highly dependable stream of income, and for Mind Technology, it's currently paying exactly half the bills.
We don't even have to guess at how important this is because CEO Rob Capps explicitly credited this division in the earnings release. He stated, "Our aftermarket business remains a steady contributor, continuing to provide a solid base of revenue. It's the dependable, recurring nature of that segment that acts as the ballast, keeping the whole revenue ship steady, even when brand new equipment orders might be fluctuating."
Which brings us to Section 3, navigating macro uncertainties. Let's talk about those choppy macro waters. Because as any good analyst knows, it's not all clear skies right now. The most glaring sign of immediate headwinds is found in their CMAP segment. Their marine technology product backlog has shrunk. A lot. A year ago, that guaranteed future work sat at a really robust $21.1 million. As of this report, it's dropped all the way down to $7.6 million. That is a sharp, undeniable reduction, clearly signaling that customers are hesitating to sign on the dotted line for major new orders right now.
The report impartially lays out exactly why this visibility is shrinking, and it's heavily tied to external factors. They cite specific geopolitical constraints, most notably, the ongoing conflict in the Middle East is directly impacting the operations of some of their customers. You add in broad economic uncertainties, general security concerns, and political unpredictability, well, companies across the entire marine tech industry are just hitting the pause button and exercising a ton of caution. So we're left with this really fascinating contrast. On one side, you have this immediate near-term cautiousness. Management fully expects this to cause some operational softness and reduced visibility over the next little while. But on the flip side, management is pointing to a strong, widely predicted resurgence in long-term marine exploration activity. In fact, some of their own customers are already seeing their backlogs increase. So the long-term horizon actually paints a much brighter picture.
That brings us to our final stop. Section 4, Long-Term Outlook and Strategy. Looking toward the horizon.
So how do they actually survive this near-term fog so they can capitalize on that long-term resurgence? Well, you need a defensive moat, and Mind Technology's balance sheet provides exactly that. They are sitting on approximately $17.6 million in cash and cash equivalents. Their liquidity, meaning the cash they have readily available to meet obligations, is incredibly strong. Having a war chest like that allows them to operate without hitting the immediate panic button, even with that shrinking backlog we talked about.
And that strong cash position perfectly backs up the CEO's strategic mindset. Rob Capps noted they are actively evaluating opportunities to enhance stockholder value. Because of their liquidity, he says, Mind has both the resources and the flexibility to act quickly and efficiently when the right opportunity arises. Basically, they aren't just sitting still and treading water. They have the capital ready to deploy the second the macro fog starts to lift.
So after tracking this entire journey from their really solid top-line growth and clawing back into operational profitability, navigating those undeniable geopolitical headwinds, all the way down to that rock-solid $17.6 million defensive cash position, I want to leave you with this final thought. When the industry caution inevitably thaws out, with that kind of liquidity and strategic mindset locked and loaded, is Mind Technology poised to ride the next big wave of marine exploration? Thanks so much for joining me on this explainer, and keep asking the right questions.